So the short Australian dollar against the US dollar position, I was initially thinking that I should add to the position as discussed in TMM 54. I did say that I would add to the position if it broke 0.675. But then I thought to myself, well, I actually already have a decent exposure to the short Australian dollar. So having a look at my risk at the moment, 0.72% short the Australian dollar against the US dollar, and then about almost 3% short the Australian dollar against precious metals in total. That is what I thought. I had another look at it and I realized, well, on a monthly chart, like this is just looking to be, yeah, case of the missing candlestick, eh? It's looking like it's just gonna smash down a lot more than it currently has. Geez, that candlestick is really like to disappear. You know, that's pretty big. It's kind of broke through support there, and you might think, well, whoop-de-doo, but it has broken through support, given that the US dollar has weakened. So the US dollar has weakened, which would imply that the Australian dollar US dollar pair should be going up. But the Australian dollar US dollar pair, it's gone down even though the US dollar has weakened, and it has weakened that much. So what actually happened and what caused that was the escalation in the trade war with Trump kind of saying, well, you know, China retaliated to his initial tariffs. He's gonna go and smash them with a bunch more, an increase in tariffs on billions and billions of dollars of other goods. So the market did not like that. So if you think about it, that also makes sense because China is one of Australia's main trading partners, if not the main trading partner. What's bad for China is not good for Australia as an economy, especially when it comes to trade. So really, by shorting the Australian dollar against the US dollar, if the trade war escalates, even if the US dollar gets smashed, the Australian dollar against the US dollar is not likely to go up a lot. But if the trade war does not escalate, the US dollar strengthens a ton. That's probably more of a settling of a trade war situation. This is going to go down because the US dollar is going to strengthen more than the Australian dollar. At least that's what I believe. So I think this trade is a pretty good trade in terms of limited downside risk, but potentially a lot of upside risk because also have to take into the fundamentals of what's going on in Australia, and one could argue that the economy is not going to get much better and it is about time for a downturn, and if that does occur, you could see this go down to 60 cents. This is what the chart is telling you, that it wants to go lower. The path of least resistance is down. And another thing, the Australian dollar can be seen as a risk on currency. So if you have a look at the Russell 2000 against the Australian dollar and have a look at correlation, well, you might say, hey, the Australian dollar and the Russell 2000, they're not super correlated. You know, they kind of go up and down. The correlation is just very volatile. But if you dig a little bit deeper, you'll see that recently, as the Russell 2000 has kind of come down, correlation has increased. So risk off, Russell 2000 goes down, Australian dollar also goes down. And you notice that the correlation kind of decreases when the Russell 2000 comes on. So during risk on situations, there's not a lot of correlation, perhaps. That's what it's implying over the 20-day period of correlation that I'm currently looking at. And during risk off situations, once again, risk off situation, correlation does tend to rise, and that kind of does make sense given the current market environment where, you know, generally there's risk on or there's risk off, and when it's risk off assets just move down together. And you can see that's what's happened now. The correlation has increased again. That kind of really implies, first of all, a risk-off environment, and second of all, that if the Russell 2000, if risk-on shits itself, risk-on assets shit themselves, and stocks get smashed, that kind of implies that the Australian dollar is going to get smashed as well. So, being short this trade, it will benefit if there's risk off. If there's risk on. Getting confused. It will benefit if there's risk on in the markets. It will benefit if the trade war escalates. Although perhaps not as much because the US dollar might get smashed as well. And you could potentially argue that it'll benefit if the trade war is settled and the US dollar shoots up. So this really kind of adds some decent diversification to the portfolio, and I think it is worth increasing my risk in the position. I've only actually got 0.72% right now. I know I've got a bit of short Australian dollar in the other positions, but I think I could definitely bring this up to 1.6%. It's something that I think would be decent. So those are my thoughts on the Australian dollar. Thank you for listening.